they are doing their best to make sure that you set yourself up for success. You don't default on the loan. You don't, they don't have to take your house. They're doing their best to avoid that. That is their goal. That's what I believe their goal is. That's what it looks like from the surface. So I don't think they're trying to be predatory, but at the end of the day, it's going to be up to you to spend wisely. It's going to be up to you to pay everything back that you take out from your home equity. Yo, what's good? What's good? Latrell in a hoodie, and welcome to another episode of the Brother Next Door podcast, where we talk about finance, personal development, and skills to get you further in life, the actual steps, and my own personal experiences. In this episode, we are talking about a credit card, not just any credit card, not any regular credit card, but we're talking about a credit card that is backed by your home equity, if you have one. And so let's get right into it. We are talking about the Aven credit card, first of its kind. So understand, with this credit card, like I just said, it is backed by your home equity. So in order to qualify for this credit card, you have to have a home. You have to have equity in that home. You can't just have a home, but you also have to have equity that goes along with that home. So I'm going to be sharing my screen the entire time, but no, it's not a complete requirement that you are watching this on YouTube. I'll be talking through it all throughout the episode. So let's get right into it. What is the Aven HELOC credit card? Understand, what is a HELOC? A HELOC is a home equity line of credit. What that basically means is you take whatever your home appreciated at. So you bought it at a lower price, the value of the home raised, you know. So you take that amount and you subtract that amount by how much you still owe, and that is your home equity. And so understand, if you have home equity, then you can apply for this card. But that's what a HELOC is. That's what this card is all about. Understand, as you can see, 7.99 all the way up to 15.49% variable APR. What does variable mean? That means it can change. It just depends on what the rate is. Depends on what the national rate is. Understand, it's a 2% unlimited cash back as you spend on the card, up to $250,000 limit, which is unheard of for a credit card, unless we're talking about, the black card or any of these super exclusive cards where you could just, run it up. Most ordinary people don't have access to these type of lines of credit. And then starting at $0 to get the card, and then you could get the card, or you could be approved for the card as fast as 15 minutes. So understand that this card is very attractive, right? This card would be very, very attractive to individuals and people who are looking to do home improvements, people looking to do some crazy, like pay for their wedding with it or whatever, right? But just having a large amount of funds available to spend, right? And having that amount backed by your home equity. So let's look more into it. You can balance transfer. So say you want to consolidate all your debt, you're able to do that with this card. So you can transfer all other high interest debt onto this credit card for just a 2.5% transfer fee. So you got to weigh, is the interest on that card more than just doing a 2.5% transfer fee over to this card, right? And so obviously do your due diligence, figure out if that's the right choice for you. And let me go and stop here. I'm not a financial advisor. Seek professional advice before you go out and get this card and put your house on the line, right? By getting this credit card. You can cash it out at a bank, but understand that there is a 2.5% fee for doing so. They have flexible repayment options, only pay for what you use. You could make payments like a regular credit card with a minimum of 1% of the statement balance plus interest. Or for your cash outs, you can also have the option for fixed monthly payments. Understand, no annual fee, right? Starting at $0 to get it. And so you got origination fee $0, annual fee $0, appraisal fee, ze- notary, all these different things to just lure you in into getting this card. And it takes only 15 minutes. So guys, you got to understand this is one of those things where not necessarily it's too good to be true because it's a legit product, right? But the problem is they're making the barrier of entry and the barrier of just receiving the card so enticing and so easy, right? Only 15 minutes to apply. You don't have to pay all these regular fees that you'd usually have to pay for a HELOC and all these different things. So catch that in the marketing. Don't fall victim of the marketing. But it's not a terrible product if you are responsible, if you are, able to pay things off, you have the funds to do so. This is a great product with a low interest to be able to do so. Pay the card off in full every month like you would a regular credit card, and you won't have any issues, family. So definitely keep that in mind when it comes to this card. And then they go into you save, up to 50% every month compared to other credit cards. Yeah, I guess. But if you're paying it off in full, you wouldn't have to worry about interest to begin with. So pay your credit cards off in full, family. And then the next thing I want to show you is they have resources for you. So if we go here, this is here, let me show you where this is at. This is right here in the disclosures. And so if you go there, it has home equity lines of credit and what you should know. And so they're giving you pamphlets, they're giving you resources before you make this choice of getting this credit card. They're making it as easy as possible. You're already on the website, you're already thinking about getting the card. Do your research beforehand. So they're not being deceitful. They're not, anything like that. They're giving you the information. They're putting the information in front of you. It's up to you to take that extra time and not just 15 minutes to really understand what you're getting yourself into. And so with this PDF in specific, or this PDF specifically is just letting you know, hey, once you finish, you'll understand the effects of borrowing against your home. You'll think through your borrowing and financing options besides a HELOC. So they're not saying this is the only option. This is your only product. You have other options. You'll see how to shop for your best HELOC offer, and you'll see what to do if the economy or your situation changes. So understand on the surface, they're trying to work with you. They're not just trying to take your home. They're not just, out to get people and get as many homes as they can. That's not their goal. Their goal is to get people access to a large amount of money. That way they can maneuver how they need to maneuver in a smart way. Understand you cannot use this at the casino, right? You cannot use this at the casino. So if you thought about it, forget about it. Don't do it. Don't risk your crib to go down to the casino and bet some money because you can't use it for this credit card. Thank the Lord. But as you can see, it's showing you all the different options. Each column, how much can you borrow? Is it a variable or fixed rate? Is your home at risk? As you can see for a HELOC, which is what this card is, your home is at risk. Typical advantages: continue repaying and borrowing for several years without additional approvals or paperwork. And then typical disadvantages: repayment amount varies. Repayment is often required when you sell your home. So that means if you're getting ready to sell your home, you need to basically immediately pay off that HELOC generally. And so take that into consideration before getting any type of HELOC, whether it's this card or a regular HELOC, is you're gonna have to pay that back if you plan on selling your house. So understand upfront cost of general HELOCs include property appraisal, which is a formal estimate of the value of your house, an application fee, which may not be refunded if you are turned down, closing costs, including fees for attorneys, title search, mortgage preparation, and filing and filing property and title insurance and taxes. So all that stuff comes with a normal HELOC, but you can avoid that by getting this credit card, right? And so this is just an option. That's all this is. This is just another way of being able to use your home equity line of credit, HELOC, to be able to pay for fixing up your house or, improving your house, making the value of your house even greater, right? Adding a pool or changing up the kitchen or buying new appliance, whatever the case may be. But now you have that option to do that with a relatively low interest rate from a credit card standpoint, not necessarily a HELOC standpoint. So definitely keep that in mind and understand, like I said, they have plenty of resources. What credit score do you need? They basically, let you know, hey, you need a 640 FICO credit score, a combined loan to value under 89%, and demonstrate a sufficient income, right? So understand all signers must be at least 18, of course. All signers must possess a valid government issued identification document specified by Aven. For applications using second homes or investment properties, there are additional requirements. And then for loans or for lines above $100,000, borrowers need to provide proof of insurance and proof of adding Aven slash custodial community bank as a beneficiary of the policy. That's another point I want to make. Aven isn't the bank. They're just a fintech company. Coastal Community Bank, which is who they partner with, is the actual bank. So there's another piece of that for you. So understand how I feel about it, me personally, without owning a home, right? Without me personally owning a home, I think it's a slippery slope, especially if you're already struggling. Don't go get this card if you're struggling. If you're struggling, sell that house and do what you need to do, right? Don't go into debt and then having to give up your house anyway, right? It, get out while you up. Obviously, you have equity, so get out while you up, and then use that money to get through the next couple months, years, or whatever the case may be. But if you are responsible, you are holding it down, you do have the income, then this may be a good resource for you when it comes to having a credit card with a relatively low interest rate, only having to pay 1%, but you're gonna pay it all the way in full every single month because that's what you should do, right? But obviously, if it's a big purchase, right, you're doing big remodeling stuff like that. That's why you took it out in the first place. But do your best to pay it off as soon as possible. They also offer, like I said, you saw the flexible plans when it comes to repayment. So they are trying to help you out. They're trying to do the best they can. They do have a type of insurance where if you do go unemployed, then you're covered for that, right? And but if you don't pay for it, then you out of luck, right? And so you got to take that into consideration. They are doing their best to make sure that you set yourself up for success. You don't default on the loan. You don't, they don't have to take your house. They're doing their best to avoid that. That is their goal. That's what I believe their goal is. That's what it looks like from the surface. So I don't think they're trying to be predatory, but at the end of the day, it's going to be up to you to spend wisely. It's going to be up to you to pay everything back that you take out from your home equity. So that's the episode. I'm gonna keep it short. I'm gonna keep it simple. I'm gonna keep it to the point. I just wanted to bring this up to your attention, especially if you have a home, you have a 640 credit score, and you have some equity along with that home. This may be a good option for you. If you don't yet, hey, keep working. Do, get a credit card, get a starter credit card, get a student credit card, whatever, start building up your credit. There are other ways to build up your credit. This isn't the only way to build up your credit. This is just one way to access your home equity line of credit. So I hope you guys are enjoying the episodes. Like, comment, subscribe. Let me know what you like. Let me know what you don't like. Let me know what I can improve on. And I will see y'all in the next episode. Peace.